What are you and your colleagues, what are the main areas that you're being asked questions about? Morning to you.
Good morning. Well, I think the biggest one and the one that's dominating at the moment would be the furlough system. This is where if employers have staff who can't work or don't have work to do, they can put them on furlough. It's like putting them on standby on the telly, and then the government will pay 80% of their salary, up to £2,500 a month. The employer doesn't have to add on top of that. It can if it wants to. The state will also give the employer the national insurance contributions. It'll give them the minimum pension entitlement on top. So there's zero cost to the employer. And my big issue with this at the moment is many employers are not putting staff on furlough. They're making them redundant, or they're giving them unpaid leave. Now, I think this is likely to be because they think that in some cases they would be cheating the system if they put them on furlough. But that is the wrong way round. The state has made companies the gatekeeper to this new welfare. It wants people actively to support it. It wants firms to do it. That's what keeps the economy going. They've got discretion. So just let me give you a list of some of the things that you are allowed to furlough for that I've had confirmation that people are getting wrong. Of course, there's the obvious. You can furlough just the staff who have no work. It doesn't need to be all staff. You can furlough staff who can't work because they need 12 weeks self-isolation. You're allowed to do that, even if everything else is busy. You can furlough staff who can't work because they must be home for kids. You can furlough those with variable incomes, even 0 hours contracts or agency workers. And there's a formula to work out how much they're paid. And this is one of the big ones. You can rehire staff who were on your payroll on the 28th of February. You can rehire them. Even if they left voluntarily, if you made them redundant, you can bring them back and furlough them. And my big encouragement to any employers listening is, if you can furlough, furlough.
How long a period for, Martin?
Well, we think it's initially going to be 3 months, but it's likely to be extended by the government as long as that needs to be. But this could be backdated from the 1st of March. Admittedly, there are some cash flow issues. This is the only reason a firm may not be able to furlough, if it doesn't have the money just to pay in the short term until it gets recompensed by the government. But what I'm suggesting to people out there who are listening, whose employer has said no, for example, to taking them back if they're made redundant, is take them the guidance. We put it on our website. Say to them, you can furlough me. I'll reduce my salary to 80%. You don't need to give me any more. I promise I'll leave at the end. But if you can do this, you are the gatekeeper to this new form of welfare state. Please furlough.
Now, that helps PAYE. People who have limited companies have been contacting me on LBC a lot, and I'm sure, Martin, they've been contacting you and your colleagues. What's the advice if you're running your own firm?
OK, so quite simply, this is one of the holes in the system. And I have to be honest, there are quite a lot of holes in the system. I think the state has done a reasonable job of providing support who needs it, but limited company directors. And what we're really focusing on here is where you're a sole employee limited company. So you're a one-man or one-woman band. You've structured your finances as a limited company. You earn money 2 ways. You'll probably pay yourself a small salary via PAYE, and you'll take most of your cash through dividends. Well, there is no support for the dividends. It's as simple as that. That is a policy decision the Chancellor has made. People are lobbying for it to be changed, but it's a policy decision. So the only option you have if you're not working is to furlough yourself as an employee, which is allowed. So you're on PAYE, you can self-furlough. Now, strictly the rules say if you furlough as an employee as opposed to the self-employed scheme, you can't work. But I've had confirmation, while you can't do any normal work, if you're a limited company, you are allowed still to fulfill your statutory obligations as a director for filings and things like that. And then for the rest of it, there's universal credit. And I think people are poo-pooing universal credit, but in the right circumstances, in London where rents are high, the housing payment has been unfrozen. £1,000 a year has been added to it. The minimum income floor for self-employed has been got rid of. And in some circumstances, that means people might get £1,000, £1,500 a month if they qualify in the right way, and that's tax-free. So for limited company directors, I don't promise this is going to be cheering them up a lot, but furloughing yourself and claiming universal credit are the only things available. I don't have a better solution.
So-called mortgage holidays have been made available, but Martin, some of my listeners are concerned it could affect their credit score, their credit rating further down the line. Your advice there?
Well, if you do it right, it won't, but if you do it wrong, it will, and I'm hearing that some people are doing it wrong. So let's just talk this through. A mortgage payment holiday is where your mortgage lender says to you, you do not need to pay your mortgage. Currently, they're doing it for 3 months. Most of the major lenders are now, you can apply online for this. You don't need to call them up and clog up their phone lines, and it can take as little as 5 minutes. It's quite an easy system, lots of success on it. Now, what it means when you take a mortgage payment holiday is you don't pay for 3 months. The interest does still tick up, and you will have to pay it back afterwards. But just to put that in context, let's take someone with 20 years left on the mortgage, a roughly typical amount, who's paying £700 a month now. If they take a 3-month mortgage holiday, what will happen is, for the remaining 19 years and 9 months when it finishes, instead of paying £700 a month, they'll pay £712 a month. So a moderate increase to get the cash flow benefit now, which for most people who are struggling is really needed to keep your head above water. The big problem is some people are trying to give themselves a mortgage holiday by simply cancelling their mortgage direct debits. That is a big mistake. That will hit your credit score. That is a very big negative. You mustn't do it. A mortgage holiday has to be approved by the lender. Once it is, from that point on, not paying will not affect your credit score. It won't go on your credit file. It won't affect your future credit worthiness.
Lastly, you have quite rightly alluded to the fact that these are uncharted waters, extraordinary times. How do you think the government, and in particular Martin Rishi Sunak, the Chancellor, has coped and has fared?
I'll try and give you probably a slightly political answer. I think in the stuff that Rishi Sunak has done, it's been revolutionary and radical, and they have rewritten decades-old policies in days, which has been quite extraordinary. The furlough scheme, the self-employed scheme, and they've had to make it up. I think the real test will come over the next couple of weeks as we see the holes in this system, such as employers not being willing to play ball on furloughing, leaving people in the lurch, such as the self-employed who are struggling, or people who set up businesses for after April 2019 or even before April 2019, but because of the way the year split, it wasn't 50% of their income and therefore get no self-employed support. I think we need to see now whether there is a rigidity in following the initial proposition, or actually there is a bit of gap management where they look and say, here's what's missing, we need to start fixing it. I think that will be the true test. So I'm going to give an A- so far for the rapidness of bringing in these new systems, but that grade will degrade if over the next couple of months we don't start to see some finesse and nuance to what was put in place to cover the holes. I don't blame them for having holes so much in the first place because it was such a radical change that they had to build up. But if they allow those holes to continue, I think then the grade has to be lowered.